All right, welcome to Tribeca Trade Group's Monday mentoring session. Tonight we're going to go over a little bit of indicators. We're going to go over indicators before Alcoa reports earnings, which should be out any minute. So I wanted to go through, first of all, what kind of indicators I have on my screens, and we'll start with some of the basic ones that I look at. I'll switch to Alcoa on here. Let me switch to the 5-minute. And by all means, whatever questions you guys have, please go ahead and ask them. But a couple indicators that I have that I start with, one of the most basic ones is MACD. MACD is really used for trend change, and that provides signals. So that's one of the charts. A lot of these I kind of talk about as, which is really not the right term, but I talk about, a bit of training wheels. Whenever you can kind of see that the trend has changed, that should tell you what kind of momentum that you see. So we can look at MACD on any particular chart, but we can look at it in terms of, this is the daily chart. Here was your buy signal in MACD. And this, when the blue line crosses the white line, is usually the signal that you would want to get into a trade, and that would be also, telling you that, in this sense, the down trade is essentially over. Now, it's not going to always catch the low perfectly, but nevertheless, it won't be that far off. Still don't see Alcoa out yet, by the way. Let me just move this over to here. So that's one of the first indicators that I look at. Second of all, and so you could see that we've had, back on the 29th, this provided the crossover. Here was the low that we made. That was back on January 20th. Oh, here we go, Alcoa out. So it looks like 7 cents versus estimated 2 cents. So it looks like they did beat. Let's see what the stock is doing. Stock is whipsawing around a bit. So let's see what other numbers that they've got here. And it looks like it's selling off here. Throw this. So it looks like they missed on revenues. First quarter revenues, 4.95 billion versus estimated 5.2. So a lot of times with these bottom line numbers, it could be, who knows what's going into the bottom lines. Could be, one-time charges and so forth, but they did beat on the bottom line and missed, looks like, on the top line. And initial reaction isn't too much. It's right around the close. Okay, so now that that's over with, so we can go back to the Alcoa chart on the daily. So that's the first thing that I look for. So this will tell you, number one, change in trend. Could also be your entry for a long position. One of the things that you always want to make sure is that these two lines cross over. Sometimes you think it's going to happen and it doesn't actually happen. We saw that with the S&P. Over here, you can see it's actually did cross over now to the downside. So here would be, basically a textbook change in textbook crossover here in the SPY MACD. Notice it did cross over here for a couple days on the daily chart, and then it flipped right back. So you want to make sure that these two lines start to separate, which they are now. So, maybe this signal is starting to tell us something here. that we do have that. That's the first. That's one of the first indicators that I'll look at. Another indicator that I'll look at, I will actually have some short dated moving averages that are drawn on my charts, and it's kind of the same thing. This is the blue line is the 5-period exponential moving average. The yellow line is the 20-period exponential moving average, and I'm also waiting for a crossover in these two names. So you could look at when we originally saw this crossover here in SPY. We did see an MACD crossover. However, we crossed back over to the short side. A lot of people don't like to look at these until they cross into positive territory as the trend is changing. But I think for the most part, what you want to look at is the crossovers. Yeah. So some chat is just asking for the link. All right. Any questions so far on those two indicators? And again, I want this to be as much Q&A as possible for you guys. So by certainly ask questions away. But you can see the same thing on taking a look at another example. You can use this. You can use this indicator, and next I'm going to talk about the RSI indicator. So we talked about MACD. We talked about the exponential cross as well. This is the 5 and 20 on my charts. I can show you, Sam, and I can also try to send that out as well. But we could look at XRT, which I've been talking a lot about XRT. Here was a nice crossover in the MACD. You notice that this didn't exactly occur perfect timing with the two exponential moving averages, but you can kind of use the two for confirmation. So you see the MACD crossover, you see it again here. Notice what you're seeing now. We actually saw an MACD crossover to the downside in XRT way back here. So even before the price action started to go down, it indicated that there's a trend change taking place. Also the same thing in the exponential moving averages. Here was your crossover here. Sometimes I use default settings. So let me just click on the edit studies button. And you could see that for the exponential, I think I had to change these. So whenever you want to change these, you can click on the little wheel and you can go do plus or minus. Everything else, the close, displace, the only thing I'm changing is the length of it, which is the time frame. You could see that on the 20, I went ahead and changed that as well because I don't think those are the defaults. For the MACD, which is down here, that is the default. I don't touch the MACD. Same thing for the RSI, which I'm going to get to next. Also keep that as overbought 70, oversold 30. So if you guys are ready, I'll move on to RSI. Any questions so far about those two indicators? Kind of work in the same type of fashion. They're similar, but the crossovers are going to be occur on different time frames. The other thing that I use before I go into the RSI is I use this for trend change. So if I'm in a long in XRT and it's staying above the 5, notice the whole time the price action is staying up above the yellow line, which is great. I'm long. I'm going to stay long until the price action changes trend. So all of a sudden, right around 318, 319, you start to see the price activity dip below the 5-period exponential moving average. So you can use that as your stop. You could say, okay, I've been following this trend all along. Trend's changing a little bit. Now, sometimes it often does reclaim. The 5 period is very quick. Some people use the 8. I use the 5. I like to see faster signals, but you can change this. A lot of people use the 8 and the 21, I believe. It's all a matter of personal preference, how quickly you want to see the signals. The shorter the time frames that you have on the signals, the sooner you're going to see these crossovers. However, once in a while, they can lead to false signals. But notice what we did here is once we got down to the 5 period, got below the 5 period exponential moving average, it held the 20. The 20 is really, or the 21 is really your ultimate trend that you want to keep in front of. So notice we did crawl back above, and we maintained the 20 period moving average, and we actually climbed back above the 5 period. Now you see right around the first of the month, which was, I think, around the high of the S&P, then we start to break down both. And as you can see, these two moving averages are getting really close together. Not only did we break the, we broke trend here on the 5 and the 20, we're now underneath the 20, and you can see the two moving averages cross over. So that's the first thing that you want to see is perhaps when you're in a bullish trade, the price action dip below the 5, watch it dip below the 20. You want to be out of your long at that point. Once you start breaking and flirting with the 20 period moving average, if we break the 20 period moving average, the trend is essentially changing, in my opinion. Good so far? And any questions? Also note, some people use straight up volume. Take a look at the volume increase on XRT. So the volume confirming that something is going on here. So much, if you look at the average volume all through this uptrend, something's not right. Some big volume is confirming this change in trend. The VWAP kind of acts the same way. Once you slip under VWAP, it's essentially you're slipping under trend, and you're breaking down. Alcoa down to 950 right now. All right, so watching Alcoa slip down. So Chet does use VWAP for 2-3 standard deviations on his 1 minute bar. Yeah, I mean, if you have any examples of how you're using the VWAP, you can use that as signals. Just kind of watching intraday price, sure. Okay, so let's go back. XRT seems to be pretty easy to take a look at. The other thing that I wanted to point out is the RSI. So I use RSI very much. The reason why I use RSI is two things. I'll use RSI as I don't really want to be entering into a long trade. And same thing, you could use this I use this for day trading as well, but I really don't want to get into a long trade when the stock gets overbought. Unless it's a day trade, maybe just as it's getting overbought. Stocks are a little bit different than ETFs, in my opinion, using RSI. Usually once stocks get overbought, they usually come back in. This is more true the larger the index is. So if you go back and you look at, the only time that SPY's got to hit 70 RSI, what happened here? Well, we got a little bit overbought and we never got back. That was it. Once it hit 70. Now the signals aren't always that clear, but you can look at this on the downside as well. We got oversold And it wasn't exact, but we did bounce from there. We almost hit it again. Notice we made a higher low here too. You can look at this in terms of looking at higher lows as well in the trend line. So you can actually draw a trend line and say, hey, we put in a low here, but it was higher than where we got to before, and then we bounce from there. Notice where we are now. We got, I believe, on the first of the month, the RSI touched 70 as well. Yep, right on 4-1. So going back to why I use RSI, number one, I don't want to be entering into a long. So up here, with the S&P touching a 70, certainly don't want to be entering a long here. And I could also use this to counter trend trade. I could say, okay, SPY or S&P futures, they're getting a bit overbought. I can sell call spreads higher out of the money, or I could buy puts based on that. And you'll notice we haven't really sold off too far from that, but we backed away pretty hard from that 70 RSI. And also what I like to do is, we've talked about three different indicators. Notice in the S&P, we haven't crossed the two lines on the exponential moving averages, have not crossed over yet. They did cross over here on MACD. We did, you can bring in Williams here as well. And so, I should have said this in the beginning of the mentoring session, but it's all these indicators, it's, use the ones that you find are working for you. There's not going to be a perfect indicator. If there was, everybody would be making money off of it. And, that would be the one indicator. The reason why people look at so many different indicators is because they work. You have to be very disciplined when you use them, just like anything else. And all the indicators, they don't provide perfect signals all the time. So Williams percentage R is another one that people look at for trend change, for momentum change. Usually when this crosses the 50 line, the negative 50 line, that's a trend change. So taking a look at where we are in the S&P, here was when we last crossed and we stayed. This is normally your signal once it crosses this negative 50 line. So notice when this happens, MACD crossover, higher low in RSI, exponential crossover, and the Williams percentage R crossed over the negative 50, and then it stayed above. Now you want to see this happen. You want to see this line stay above this, and that indicates that the trend is essentially moving the same way. Once it backs off from here, you want to get worried, which is kind of what we're doing now. So the more of these things that you use, and the more of them that are telling you there's a trend and change, the more power I think there is in it. So, going back to where we are now, let me just shrink this down a little bit. But we hit an RSI level that was a bit overbought right here. So that's coming in. You see an MACD crossover. You see Williams go below the negative 50 line. We're now at negative 65. And we have not seen the MACD crossover yet, but that could be shortly. So that's almost what I would wait for a final indication of trend, if you're looking to really make sure. Any questions on what we covered so far? Questions? No questions? Really? Alcoa is coming back here a little bit, back to 948. Why do I use RSI? because it'll tell me, number one, if a trend is getting, if a name is getting a bit overbought. So the main thing that it's doing, the RSI is, and you can look at this on, you could look at where I usually go to make sure that I understand everything is you could go to stock charts. I believe it's free. But what you're checking to see is it's a momentum indicator, and it compares the magnitude of recent gains to recent losses in an attempt to determine overbought or oversold. So that's, essentially I'm using that because I don't want to get into a long position or a short position if the stock is overbought or oversold. And I'm also using it if I'm long. I'm essentially saying, okay, I should be taking targets here. It works a little bit different. I started to talk about the difference between a single name and a sector. So take a look at RSI on, we talked about US Steel today. US Steel, so a name can stay overbought for a long time. We saw this with energy names being oversold for a long time. So this can actually stay, as long as it's dancing along this RSI line and staying around 70, 75, you're following the trend. As long as it doesn't get to, like, let's say above 80, then you really have to be a little bit uncomfortable with the trade once it gets over 80. With the S&P, IWM, Qs, I generally don't wait too much longer once it gets above 70. But a single stock, it can stay overbought for a while. Does that make sense? I hope I'm explaining that. But you can use this with single stocks. The RSI could be a little bit different. And as long as it gets a little bit overbought, but not crazy overbought, you're essentially okay. With an ETF, it's a little bit different. Go back to, let's look at IWM on the daily chart. So here's what it did on, a couple times it got really oversold back in January, and it bounced from there. It didn't go too far. It hit oversold again, and that's your indication that you really don't want to be pressing your shorts at this point. Well, I don't know if it's going to be years. I think is an extreme case. Let's go. I think I was actually on the, the 5-minute chart. And the other thing is I tried to do, so I'm moving this to the daily chart. So they can stay, so I will use the RSI for a lot more for ETFs and for the major indices. I find it's a little bit more reliable. As you can see with X, it's been overbought. It actually got to an 81, came back in, and has been staying trending all along this overbought line. Same thing when it was oversold. It got oversold many times. So it's a little bit different with ETFs, with single names. When I use it to day trade, and we can look at today's activity in Apple. I mean, some stocks, they bounce off the RSIs. I mean, here's a good example of Apple. Apple got oversold and then started to make higher highs here, or higher lows, I should say, and higher highs. So you could use that until we got to here. We got overbought, and we've been coming in a bit from there. You can look at Apple today. Take a look. Overbought on the RSI on the 5-minute, and we never really got back there in today's price activity. So the other thing I like to, speaking of overbought and oversold, let me go to my other charts. I do break these up. I look at so many indicators that I do, we'll look at this both ways. But you could look at this in terms of the SPY today. Take a look at futures today. The Bollinger Bands also measure. So that's the next indicator. So does anybody have any other questions about RSI? And then I'll move on to Bollinger Bands. Okay, cool. So let's go forward. So I think here's a good example of the Bollinger Bands today. Why I have these on my charts, very good for day trading in my opinion as well. The red line is a 2 standard deviation move. The purple line is a 3 standard deviation move. I get very wary, especially in the indices. The bigger indices, when you see a 3 standard deviation Bollinger Band snap, meaning we've pierced a 2 and we've pierced a 3, sometimes it's too extreme. You go too far too fast. And oftentimes you'll move back inside the Bollinger Bands, and sometimes you'll go back up. Today we hit the 3 standard deviation Bollinger Band, and that was it. That was the high of the day. So it's like warning, warning, warning. You don't want to be adding. So you want to. It helps me be patient. If I didn't have these on my charts, and I say, "Oh, the S&P is starting to move higher," this tells me it's too extreme of a movement, and we came right back in. So with these, one thing I've learned with Bollinger Bands is you also have to ask yourself, what kind of a day do you think we're in? If we're in a range day, sometimes you'll see these, and we'll talk about the move here at the end of the day. This is what's called is riding the Bollinger Band down. And notice we never really hit a 3 standard deviation Bollinger Band, the purple line. We went outside the 2, and we stayed there. So this is what you want to see. You just don't want to see it go far beyond a 3 standard deviation Bollinger Band. That would have told me if I was in a short, which I wasn't. But if I was, I probably would have said, "Hey, I'm going to take some profits here." So while this is happening, as we're riding this 2nd standard deviation Bollinger Band down, you almost want to be with the trade. So that's how I use them to trade. I also ask myself, are we in a choppy trade, a choppy day, or are we in a trend day? Sometimes that helps. Sometimes we'll literally go from Bollinger Band to Bollinger Band to Bollinger Band. And then every once in a while, what I also look for is the Bollinger Bands to start to open up in one direction. Sometimes that gives a hint. Not always. It doesn't always work. But sometimes you could start to see the Bollinger Band open up, and sometimes the trend will go that way. You could see that the Bollinger Band flattened out here, which also gives you a hint that price action isn't liking this move up. Notice when the Bollinger Bands opened to the downside, we never really saw them come in and flatten. When do you know if it's choppy or trending? You don't. I mean, that's something that you kind of have to ask yourself in the back of your mind. So, you could try to use these indicators to help you determine whether or not you've got a trending or choppy day. Sometimes it's a combination. Today was a little bit of a combination of the two. Let's go back to S&P futures. Taking a look, that's, you could go back to the MACD to kind of help you with that, right? Here was the move up. 4 o'clock this morning, move up, change in trend here. Notice that sometimes these two cross over, but you don't see the price action go down. All this is telling you is basically that we're no longer rising, and you don't want to be in the trade again until you see it cross over to the high side, which you see that do that a little bit here, but not big separation. Then we crossed back over here, and then for the most part, we're in a little bit of a downtrend. Here's your sell signal, buy signal. Again, sometimes you'll get chopped up if we're in kind of a choppy day, but at least you know what side the trend is on. I mean, right now we've been getting what, one out of every 3, one out of every 4 days is a trending day. So for entries, Chet, I don't know if I'm really looking at entries so much. I'm basically using them. I use this term quite a bit, but I'm using them for safety reasons. I'm trying to avoid mistakes with the Bollinger Bands. So, let's say I don't really look at Bollinger Bands for entries. I look for Bollinger Bands to watch extreme moves, overbought, oversold. So I'm not using them for entries. I'm using them for watch out, the move is too extreme, like we saw in S&P this morning. And I said this too this morning. I said, "Ooh, we just snapped a 3 standard deviation Bollinger Band. That's too much." While I'm in a trade, I will look. So let's say, and again, this is completely hypothetical as I was not in a short trade, but let's say I was. Let's say I was playing a short trade here. I saw a big red candle, and I, made a hunch that we were going to sell off. What I'm looking for is these Bollinger Bands to really start being downward sloping and stay downward sloping. Yeah, no worries. Yeah, so I mean it's a good point. I don't use them for entries. More for entries is what I talked about in the beginning, which are things like MACD crossovers, uh, exponential moving average crossovers. Those I'm looking for entries. Some people trade with the Williams too. So instead of Williams, we can look at slow stochastics as well. Those work pretty well. I'm thinking about incorporating them more in my trading. I've used them previously. How you guys liking this so far? Is this more or less what you guys wanted to hear in tonight's mentoring? The more feedback I can get about this stuff, the better. Cool. So let's shrink this puppy down. Now this you want to change your colors because this looks like a nightmare to me. But I do like this one too. So let's see. Let's change one of these to yellow. See how that looks. Oh, that's still not too good. Why don't I zoom in here? So this, it kind of works the same way. And there's formulas behind all this. I'm not going to go through the formulas of how these things are all calculated. You can find that on stock charts. Each one you can spend 15 minutes on just going over, making sure, you always want a good fundamental grasp of all these indicators, just to know that, you don't want to bring the same exact indicators. A lot of these are momentum indicators. So you don't need to have 2 or 3. Again, it's whatever you are most comfortable with. Why don't we look at the daily chart? So here's a good one, right? Let's look at when we started to go up. You see the yellow line is the faster line. That crossed over here. Notice it flipped right around. So it kind of gave a little bit of mixed signals. Again, it crossed over here. And it stayed. And you want these two lines, just like we looked at the Williams, you want these two lines to stay in this overbought territory as long as possible. Take a look now where we just saw the trend change. So the faster line crossed below the purple line. So this also is indicating trend change here. So a lot of indicators that we're showing right now are indicating some trend change. The last one that I'm looking for is these two lines to cross over. Yeah, and you can change these. You could change these to see, how you want fit as well, to see how what works best for you. That's the beauty of Thinkorswim, is you can personalize all this stuff in a lot of other trading applications nowadays. Back when I started trading, you couldn't do that. You could basically bring in a couple indicators and you couldn't change them. Last one I'll talk about is on balance vol. I think the last one anyway, unless we've got another one, unless anybody else wants to talk about some other ones. This is a good one too that I like to use looking at daily and weekly charts. Some of these things, you'll find something that's a little bit eye-opening. So on balance volume, we'll take a look at where there's volume with the trend, with up days versus down days. And you can see all along here, again, a lot of things are going to show on balance volume. The low came in February 11th, which was a low. And you could see that we're making higher lows and higher highs in this indicator. You can actually draw this as a trend line, and you could do this on the RSI as well. So some people trade off of that. Are we seeing anything right now? Not so much on the ES. We're kind of stalling out a bit. XRT should be a good one because look at the volume here. So XRT, we put in a similar low on February 11th. That's why I've been watching XRT so much, is it's really giving indications. I mean, look at it today. We're really breaking down in retail, in my opinion. But you could see here, we got to a high in on balance volume, and look at us start to taper off here. And we're moving fast in the other direction. All right, so it's 5 o'clock. What do you guys have questions in? I think I kind of covered most of them. Let's take a look at Alcoa while you guys are thinking about questions. I've got the 9.5 puts that I got into for 23 cents today. So let's go over any questions that you guys have. Any other indicators that you might be looking at? I may be able to help. Yes, so proprietary indicators, that might be another mentoring session. So what I did was, so as I've mentioned, the MACD, the RSI, all of the different indicators, the exponential moving averages, a lot of these I have built into the Power Alpha indicator. Why did I do that? Because just as I'm going through and talking about all of these things converge, it gets a little bit difficult when you have more indicators on your charts. When you're watching several names a day, it's different. We're looking at everything that's, basically has stopped now, is we're after hours and we're examining different things. But, if you're looking at different points to get involved and you're watching 30 different names, it becomes a little bit difficult. So what I did is I wanted to make an indicator that looked at all of the indicators that I mentioned and puts them all together and provides me one rating based on all of those indicators lining up. So you'll notice, let me go back to the one with the Power Alpha on it, that right now, if you go into XRT, what is it telling you on the daily chart? It's basically telling you that it's falling and falling fast. So a -8 and falling. And here was your indicator. Here was your sell indicator. So I've combined a whole bunch of them into one. So that's, Sam, if you didn't get a chance to purchase that, I will be offering that. I keep saying that I'm going to be offering that, but that should be coming in the next couple of weeks. Same thing with the value area study as well. I could talk a little bit about the value area study if you want me to. I could talk a couple minutes about that. What I typically use the value area study for in terms of trading is support and resistance. What it looks at is, instead of normal volume on the bottom, talks about volume in time. Which helps. When we looked at the weekly chart or the daily chart of XRT, I want to know what's volume doing in terms of time. However, what it doesn't tell me is where are those auction areas? Where are the buyers and sellers mostly meeting? And what's changing in trend? So that's what I use the value area studies for. The yellow line is where, in the previous time frame, where all of the majority of the volume is taking place. So that's why you'll see a lot of times we pause at the point of control, because that's previously where a ton of buying and selling all met up at. So it becomes a huge convergence area of volume at that particular price. And then we look at the top of value and the bottom of value. If things are changing, they're getting out of previous consolidation zones, which is basically a standard deviation of price action, where volume is clumped around. And you'll see this. You want to make sure that you see, once price is moving away from this value area, it's telling you something different is going on. Something is changing. All right, so that's about it. That's all I wanted to cover tonight. Feel free to ask away any questions. We'll go on for another, for however long that you guys want to ask some questions. But again, the main message is no indicator is going to be perfect. I like to use, I don't just like to rely on one indicator. I like to use several of them because they do tell me different things. And I also like when several of them are telling me the same story. And it's all what you're comfortable with as well. Whatever, some people use this indicator, some people use that indicator. It's whatever indicator can make you money. It's whatever indicator that you're seeing the most signals on that are working for you. So it's a personal preference. Is it best to trade in line with the indices? I will typically get in and out of positions if I see, that's what I did today. I forget what trade I was in today. I think I was in Apple, and the market started to sell off, and I said, you know what? I don't want to be in longs anymore. So yeah, I'll always keep a look at what the overall market is doing. If somebody is selling a ton, it's all interrelated. If somebody is selling, for example, 5 million shares of SPY, and you're trading Apple's going to move. It's one of the names that are being pushed around inside the S&P. In fact, it's the biggest weight. Oh, excuse me. So yeah, so absolutely, because, and these ETFs, if you see a rotation, that's why I look at ETF flows, for example. If you see a big rotation in a sector, like we've been seeing in biotech or we've seen in utilities, if one of these asset allocators are buying $2 billion of utilities, and you have a position in Dominion or you have a position in Con Ed, the thing's is going to be carried along with it. So, that's why I look to see, what movements are going on in ETFs, because sometimes, and Kramer talks about this is why Kramer hates ETFs, is because sometimes you'll see somebody doing a big allocation into one of these groups, and it will mess with your stocks that are getting kind of swept away. So you'll often see that, and that could be what's going on with retail, is maybe somebody is allocating away from retail right now. So it's going to start affecting all those names that are in that index. All right. Any other questions for this evening? I'm going to end the recording for the mentoring session.